So that's all good. Um, all right, so just a special note, we are recording this session, barring any technical difficulties. You should have access to it. And make sure your speakers are turned on and as loud as they can go to hear the audio portions. If you have any open tabs, it is best to close them. That way you'll get sort of the video will move quickly with you, and the audio will be good as well. If for some reason you're not getting audio or video, you may need to close out during the webcast and just log back in. Okay. All right. All right, so there's some questions coming in, and I want to let you know that Mr. Bill Shelton, all the way from North Carolina, the corporate office in Cornelius, is looking after your questions in the chat box, and thank you so much, Bill, for doing that. He's team leader in the support with the support team, and also a first-rate instructor himself. So great to have you with us, Bill. Thank you so much. Here is that chat box, so you just chat your questions in here. For those of you that might be new to the GoToWebinar system, click on the send button at this orange or this little arrow here, and then this should collapse on you. So then just click on the orange arrow, and it should open right back up for you. All right. So great to have you with us. I'm excited about today's presentation, as I always am on these international forums. I think there's always something new for all of us to learn, and I always look forward to your comments and questions as well. I'll be showing you a little method I've been using with multiple moving averages combined with some VectorVest indicators that has worked really well for me, beginning in just at the beginning of January, when we finally got some green lights in the color guard here in Canada, and it's worked out really well, and I'm getting confident enough with it that I wanted to share it with you, and I'm sure there'll be more to share as we go along and learn a little bit more about using multiple moving averages. So excited about that as well. The purpose of our monthly forums, of course, we want to further your knowledge of the VectorVest system. That's really what this is all about, is learning to make money with VectorVest. That's the most important thing. And learning not to lose money. That's also important, I guess. And then to share current ideas and strategies for making money and protecting wealth. And so if you have an idea or a strategy, certainly you can chat it into the chat box here, and or just chat it in and let us know that maybe you want me to call you, and maybe there's an opportunity to do an international forum presentation down the road. So definitely we want to hear from you as well, and create opportunities to interact and share ideas with other members of our VectorVest community. So both Bill and myself will keep an eye on the chat box and make sure we get as many comments in there as we can. All right, so yeah, so Bill's going through, and he'll red flag some questions that maybe we need for the whole group, and he'll answer a lot of your questions as well. All right. Richard, I think you mean the pro trader, not the pro challenger. So hopefully Bill can help you with that. To promote the meetings and activities of our VectorVest user groups, I love this hot stock picking contest because it really does help our user groups, gives them a real purpose, and promotes their meetings and activities. And that's the idea behind this session as well. We love having you at our webinars and our forum, but there's nothing better if you live near an actual live user group to get out and join those meetings. Everybody's welcome to do so. I wrote about it a little bit in my essay, so we'll talk about that a little bit later on as well. We still have a lot of people coming into the room, and that's great. Great to have you all with us. Thank you so much. Charles, yes, when I do get a question, I will call them out. I don't snip them the way I notice Brian D'Amico does on the U.S. side of things. Not quite that proficient, but I definitely will read the question, or at least summarize the question before I answer it, always. Yeah. Oh, Tom says it must be my systems that is making Stan sound like a chipmunk. I hope I'm not sounding like a chipmunk. Tom, I'll definitely. I just moved my mic down a little bit. Maybe that'll help. Everyone else is telling me sound is good, Tom. So if it's so bad that you can't stand it, then you'll have to log out and log back into the webinar. And finally, to provide a forum for VectorVest investors who do not live near a user group community. Those are the reasons we put this forum on, and always grateful to Dr. Toledo and Steve Chappell for setting this up and allowing us to do this. Dan says, Chipmunk left once I logged into another laptop. And by the way, once again, we are live streaming this to uh, our YouTube channel, our VectorVest YouTube channel. And this is the address here. And if you just go to your web browser and type in VectorVest YouTube, you'll come across the same thing. But this is the actual link for the YouTube channel. And the nice part about it is, right after our webinar, it's already on the YouTube channel and available for re-watching if there's something you missed or something you want to review more quickly. Then I can get you the recording link. Then you can just go to the YouTube channel. This is what the icon looks like down here, the International VectorVest User Group Forum. And yeah, and you can see here a lot of people are chatting in that they really like it. So that's another nice thing. John says, no chipmunk, and welcome back. Hot Stocks Canada groups are a lesson to us all. Yeah, the Canada groups are really doing well. Very, very pleased and proud of how they're doing. But you know, there's a lot more in the competition, a lot more time coming, and it's just really great that so many user groups around the VectorVest world have taken the time to enter. I realize it's summer, and so I think the next one will be even bigger and better. So it's all good. So our agenda, we're going to do our 15-minute market forecast with a color guard review and look at some strategy highlights for Canada and the US. But definitely we want to see, and some of you that are with us from other countries, definitely chat in when we get into there and let us know what you're thinking about your market and sort of the market sentiment from your areas. And then we'll get into my special presentation on how to trade multiple moving averages for fun and profit. Yeah, Billy says it's all of those gold positions. That's certainly true for Regina, and also Coburg, I think, has 7 gold positions. And you know, they went with a very hot industry group, and that's right out of the VectorVest playbook, as I mentioned in my essay this week. So you gotta really appreciate what they've been able to accomplish. Now, if they own a lot of those stocks, and I'm sure a lot of the Regina and Coburg members do, I'm sure they're watching them with fairly tight stops. They don't have that luxury in the contest. They can't just stop themselves out halfway through. They're in it until August 30th. So we'll see how it goes. There's lots of other groups coming up. Alan, you are absolutely right. You and about 3 or 4 other members know exactly where I got this multiple moving average presentation highlights that I'm going to share with you. Alan from Australia is mentioning that. All right, so quick risk disclaimer. Everything you'll see in here today is provided for educational purposes only, should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. And you can read more on our risk disclaimer here if you like. All right, so let's get started with our color guard review. I'm just going to do one quick thing on another monitor. It's great to have more than one monitor, but things can get just a little confusing as well. So I'm going to move things around. Okay, there we go. All right, so up in the top left corner we have VectorVest Canada, and you can see our year-to-date average. Just taking the VVC/CA and doing a quick test from the end of December until Friday, we're up about 12.94%. Unfortunately, we haven't moved a lot since our May forum, and that's true of a lot of our groups except for Singapore and Hong Kong, I believe it was, have actually fallen quite a bit from the May meeting. Everybody else, oh, and Australia has improved quite a bit from the May meeting. Others have been kind of flat since May. But you can kind of see a lot of red as we look through all the different countries in VectorVest. A lot of caution. The color guard is bearish here in Canada. VectorVest does not advocate buying any stocks at this time. We're still in the confirmed down call. You can see that here on the right, and we got that signal on May 13th. So we're still very much in a confirmed down, being very cautious right now. There have been some buying opportunities, but we just need to use a little bit of caution. The DEW technical timing system has also turned bearish here, and the US as well, so we just need to be cautious. The US is up 14.25% year to date, but currently the color guard is bearish. They had a very quick turnaround from this confirmed up call. Really didn't get a lot of momentum or push behind it, and Dr. Toledo actually wrote about that in the essay, that even though we had a confirmed up, he was suggesting caution even at that point, even though the earnings ETI that he's been reporting, both Canada and the US, the earnings have been still quite strong overall. The earnings season is now done for this past quarter. But you can see the confirmed down call finally came on Friday, when the market had finally gone down week over week for 2 consecutive weeks. The buy-sell ratio well below 1 now, which is the other criteria, and lower today in the price column than yesterday. So caution light is on there. Australia has been doing quite well. Maybe Alan and others from Australia can let us know what's been driving the market higher there. Maybe it is the gold stocks there as well. But they're still in a confirmed up call. They've got a 17.7% year-to-date gain. Currently the caution light is on. VectorVest not advocate buying any stocks. We've had 3 yellow lights across the top here. Momentum is certainly slowing a little bit, although the buy-sell ratio improving the last 3 days. So that's all good. Yeah, Bruce, thank you. He says the US has this asterisk in the price column. Oh, maybe it came in after I snipped the color guard report. It could be, Bruce. So if there's an asterisk, that means there's momentum with the RT moving averages crossing to the downside. So yeah, just be cautious. And the UK up 12.38%, as I mentioned, fairly flat since last May when we last got together. 3 red lights across the top, and they do have the asterisks as well in the price column here. So there's momentum behind this downtrend or pullback. They have the confirmed down call on Friday as well. Yeah, and Kamel saying for the UK, Brexit is a bit of a concern still, so for sure. And Alan, by the way, from Australia says iron ore, gold stocks, and the banks are recovering a little from our Royal Commission. That's good to know. And Kamel says Italy has hurt the European market, and there is Europe there. So Singapore down 1.12%, so down quite a bit from May, and they were one of the laggards in May as well. But lots of red here. The confirmed down call came on July 29th, and lots of red. So definitely VectorVest suggesting do not buy stocks at this time. Play good defense. Use that weed your portfolio technique when the market is trending lower to help yourself remove stocks that are giving you the greatest risk of a major collapse. And then Europe up 9.17%, so definitely flat from our May meeting, slower than before. Three red lights now across the top again. Got a confirmed down call on August 6th. So definitely the caution light is on, suggesting not to buy stocks right at this time. And notice the buy-sell ratios here, 0.33, 0.22 for Singapore, 0.50 for UK, even Australia, though they've been doing quite well with a confirmed up. The buy-sell ratio is just 0.40, so it's definitely a selective market. And the U.S. the same, and then Canada 0.26 or 2.8 in the buy-sell ratio, suggesting we're near or searching for that bottom in Canada. So if it could explode up from here, but if it moves any lower, it's certainly letting us know that we're in a good buying opportunity from a historical bottoming level. And then finally, Hong Kong, color guard bearish, confirmed down, lots of red, so caution light is definitely on. Christian says EU is also a blinking start. So I don't see it here, and for some reason I get the EU update quite late, but it may not have been completed, and so it may have gotten the asterisk or blinking star after I snip the color guard. But it does look like a lot of momentum behind that move. You can see the buy-sell ratio really moving around now. And Europe is one of the countries, along with the US, where the buy-sell ratio falling below 1 is one of the criteria for the confirmed down call. So the others kind of go with the MTI and the 65-day moving average, that sort of thing. But the buy-sell ratio is really key in Europe and the US as well. Chandra, the buy-sell ratio and MTI that indicate a bottom in Canada and the US for that matter is when the MTI is near or below 0.60, and the buy-sell ratio is near or below 0.20. And from there, we tend to look at the one-day Derby winners. Has there been any transition from long strategies in the one-day Derby winners to maybe the short? In Canada, we actually had 5 one-day bullish strategies on Friday, bottom fishing for the most part. So I think a lot of gold in there, but we kind of look for that as well, as I'm sure you would in all your other countries as well. Yeah, thanks, Bruce. I appreciate that. Michelle says, do you have data on the average length of a confirmed down in the US? I don't. I suspect you're asking because I recently wrote an essay for the VectorVest Views in Canada that kind of gave the average length of a confirmed down the last 5 years. I think it was 5 or 6 years, was 78 trading days. So we're not there yet. One of our previous VectorVest forum presenters, Dr. Gord Nixon, kind of sends me an email once in a while that lets me know where we're at on those things. And I think the last one last week, we were about 55 or so days into this confirmed down. So we have a bit of ways to go on average. We don't get a lot of confirmed down signals in Canada. I think only 11 up and down signals in the last 6 years. So we don't get a lot of whipsaws. They're very, very effective signals for Canada, especially here. Sydney says having trouble with my voice coming through clear. Sydney says it's on my end. Others are hearing okay, Sydney, but I'm going to speak louder. Sorry, I do when I'm moving around here. So that could be causing it a little bit, but everybody else is telling me the sound is good. If it's a problem, you may need to log out and log back in. Okay. Yeah, Pierre says indeed there is a star in the Europe price down, so definitely the downtrend is gaining momentum. All right, Fred says sound is good, no variation, so I think we're good. I got to keep going. Sorry. Wayne says we're all good, no issues. All right. So from the market timing point of view, on the strategy section, I always recommend you either listen to the market timing report from this week. It's Kathy Onan in Canada and the U.S. doing the market timing report. Other countries will have William Land perhaps or Patrick France, but listen to your timing report, but always read the strategy section. You get a little extra insight and guidance here. And you'll note here it says investors were on the sidelines for most of last week after our holiday on Monday. All of our other three indicators, the RT, buy sell ratio, and MTI, moved lower when compared to 5 days ago. We did get that bounce off support at around 21.55. That's this green line over here at the right on Wednesday, August 6th. So we did get a little bit of a bounce. The VVC CA has popped up slightly, and you can see that we're moving up toward the resistance line, which is at 21.93. So I'm just drawing the comparison between May, what we looked at in May, and where we are today. And you can see we had 1, 2, 3, 4 RT kicker combo bearish triangles. That turned into 5, 6 bearish triangles as the market continued to fall. And then we've had a little bit of recovery with some of these green triangles, but we're just not breaking out. So that's a bit of an issue for Canada. And then my essay from the views, a new favorite gold search, and this is the Regina, Saskatchewan gold search that they used. They were leading the hot stocks picking competition when I wrote my essay on Tuesday. They had an 11.37% gain in just 4 trading days. On Friday, Coburg, which has also a lot of gold stocks, actually pulled slightly ahead of Regina on Friday. So a really excellent competition, and Don Wellwood does an amazing job with his user group from Coburg, Ontario as well, and you can see they're running neck and neck. But who wouldn't be thrilled with these kinds of returns? And then we had Canberra, Australia was at 2.66, followed by 2 more Canadian groups, and Ottawa has moved up into 3rd place now, but they were already up 2.46. Winnipeg was up and positive and still positive. So I wrote in, Irwin had attended our Tuesday Q&A and told us exactly how the group in Regina made their top 10 picks, I guess, for the hot stocks. One of the members mentioned how well gold stocks are doing, and that led to quick testing the various gold searches. The stocks selected using the Gold Rush Bull strategy on the US side produced the best return since July 1st at 13.4%. So the group went with that search. They created a watch list of the top 20 stocks from the search, graphed them, and went through a multi-stage cherry-picking process looking at price and earnings trends of the top 20 stocks. So they wanted price rising to the right edge, they wanted earnings per share rising, and they identified the top 10 stocks with the best graph patterns according to the group. And that's right out of the VectorVest playbook, as I mentioned here. Buying top stocks in a rising industry, stocks that have smooth rising prices and rising earnings. So I think a fantastic experience for Regina, for Coburg, and for all the groups. I think it's just going to get better, especially once the summer is past and groups are meeting more regularly again. But the Gold Rush search, if you don't have it in your country, we didn't in Canada. It's easy to duplicate it with the criteria that's in the US and then just save it. Uh, so it's a really good one. And then if you live near a user group meeting, the hot stock picking contest shows again the value of those groups. And then our webinars, I love our Tuesday Q&A webcasts. We've got a great VectorVest community of investors and very helpful to everyone, very supportive. So join up if you can. This is that little gold bull search. The key is the RT times CI sort, and of course the stock industry group equals mining, gold, silver. uh, Ken said, I didn't see Newmont Mining in the list. It's the largest gold mining company in the world. Well, it could be, but it may not have had the best pattern just at the time it was being picked. Okay. All right. And then, gosh, we are live streaming. I'm seeing I don't know if you see it, but I see the words that I'm speaking are showing at the bottom of my slides here. I didn't realize that was going to happen. But anyway, here's the U.S. Strategy. Again, you always want to read Dr. Lito's essay, of course, but he and the team actually put together this strategy section as well. And as trade tensions between the U.S. and China continue to tighten, the price of the VectorVest composite continued to move lower. It moved down from yesterday's close, and for 2 consecutive 5-day trading periods, BSR below 1, thereby confirming a confirmed down signal. And Dr. Lito, I'm sure, has his influence here. Although this downturn has little to do with the state of the U.S. economy, our market timing system will faithfully provide the correct guidance regarding market direction. So it is down. History tells us that the market is looking for a bottom when the buy-sell ratio goes below 0.20, and it currently stands at 0.43, so more downside movement is likely. And I saw that wording or sentiment in 2 or 3 of our different countries, so do pay attention to that. And he says, consider buying contra ETFs on down days to hedge your bullish positions. And starting last Thursday, that's what they were doing with the hot stock picks in the daily color guard reports, and they had some pretty amazing returns. So you can choose them on your own, or just make sure you tune into the daily color guard report and find out which contras they might be selecting. So you can see this tight channel that they've been in the US. I've got the RT Kicker combo timing system again, become one of my favorite systems, and you can see how well it protects you in these downtrends, gets you in fairly early to start buying. In this case, unfortunately, the market just didn't follow through, and we're currently in this channel coming back up to resistance, so we'll see where we go from there. All right, and then Dr. Lito's essay was making money with hot stocks, so he really reviewed that, and it was really interesting and fun to listen to Steve Chappell's Strategy of the Week special presentation all about gold stocks. He thinks there's still lots of room to run. I've got a chart about that later on that kind of supports his thesis that there's room to run for gold. But interesting to read Dr. Lito's essay about the hot stock picking contest, and then Steve did follow up on that as well and actually reviewed a little bit of the Regina strategy. That was I didn't know that was going to happen, but it was great. And the earnings were just about through. We're 90% through the earnings for this current quarter, and 75% beat their earnings estimates, and we're still in a bull market. All right, there is the Friday close results of the hot stock picking challenge. So congratulations to all the groups that are in the challenge. There's still lots of time. I know our Lethbridge group has started to move up here, picking really solid companies. so, so look out. There's Dallas. We've got some folks from Dallas here today, and they've moved up. Seattle, one of our newer groups, looks like, has moved up here quite nicely, and Ottawa, certainly in the mix. So lots of fun. Oh, Doug says having your words at the bottom of the screen is a good idea. That's awesome. I just didn't notice it was there, Doug, but it's great that they're there. Jack is asking, is it too late to get into gold? Well, our Huey and the Midas touch on the Huey on the U.S. side suggests the gold is going to run, and that was Steve's message last night. There's room for it to continue to run, especially with such volatility and uncertainty in the market due to the China trade war and other uncertainties. So, you know, we don't know, but you go with the trend until the trend ends, right? And it'll take another significant event to change the trend from where it's going. Alessandra says Dallas has no gold stocks, so we are happy. Yeah, you've done really well. Moved up quite nicely last week. Yeah, Tom says I see the words first time ever. Yeah, it's because we're doing the live streaming right from my computer, Tom. So pretty cool. Uh, I had a little lesson on it last week, and I just hope I've pushed all the right buttons. we'll, we'll find out at the end if everything records well, and you can get the recording right away from our YouTube. Any questions about the market timing before we move on to our keynote presentation? Uh, oh, Julian says lots of typos in the stream. Cold for gold, for example. That is probably my enunciation, Julian. So I'm sure I'll get better as we go along. It's like listening to captions on a movie. My wife and I were watching a kind of an oldie goldie movie last night, and I couldn't understand a word they were saying, so I put the captions on, and I'm convinced they were misspelling or mispronouncing every other word. Oh, oh boy. Jim, Don won't like that. There we go. Now we're spelling Don correctly. Don Wellwood. All right. Yeah, Mark says this is computer generated, really good real time conversation to text. Yeah, wouldn't it be great if we had our comments from our VectorVest community, all of you, showing up on there? I guess it would get a little busy, wouldn't it? Anyway, any other questions, comments about your markets in your area? Are you feeling, kind of what approach are you taking in your trading right now? Are you patiently waiting for a bit of a breakout or more upside, or are you playing some downside? Just really all of you. Yeah, Dawn, I don't think you can turn. I don't think you can turn the captions off. Sorry about that. Yeah, I know on TV you can turn them off, but not here. Asif says you can with other members' comments live on Twitch. Interesting. I know Glenn Tompkins is doing a tremendous amount of webinars on Twitch, which is great. Frederick says, oh, what about oil contras, ETFs? Yeah, DRIP in the US, HOD in Canada. Just be careful. Gold or oil had a little bit of a bounce Thursday and Friday, so just be careful a little bit. Raphael says feeling bearish overall. Yeah, okay. Bob says plenty of volatility and gyrations. Again, a picker's market. Yeah, I do some sort of intraday options with with the SPX and overnight credit spreads, and my goodness, the volatility has been remarkable. I've never seen it so volatile. Bob says, by the way, the YouTube stream is working well. Yay! Thank you for that, Bob. So easy to tune in there too. Jim says, I have my list of Stan's dependables ready to go, impatiently waiting for the right time in Canada to reload my retirement portfolio. Yeah, I really like that list of stocks, Jim, that I put together for that essay. And I also like our master retirement watch list. I know Australia's got some amazing dividend payers as well that Russell Markham has really highlighted, and so there's some opportunities. But the closer you buy new or add shares to positions closer to the bottoms and get off to a good start, the better off you are. Yeah, Fred, you're probably right. Bruce, can I post that list? It is in the views in my essay. Um, so I think I did post my essay, so I think it's identified in there. I'll have to look on my slides, but the list was in there for sure. It's in the views. Dawn, by the way, one of our longtime investors and very experienced, says the market would likely soar on some good news. At that point, gold would fall. Do not be over invested in gold. Be prudent. Dawn, as always, that's excellent advice. Regina with 10 stocks in gold and Kohlberg with 7. I'm quite sure their individual portfolios, VectorVest certainly would not recommend such a strong overweighting unless your dollar cost averaging values are quite low on that. So that's great advice for sure. Tom, you would have to just create the list in the US. Basically, I went with relative safety stocks, sorting by relative safety, dividend safety greater than 75, just to ensure that the dividend is going to be paid, and then dividend growth greater than 8%, and then just cherry picking from a long-term graph, a 5-year graph, just to make sure the company's earnings are rising and the dividends are growing. Dana, that essay was just this past Friday. Not this Friday, but the Friday before. Oh, that's why. It was the Friday before, wasn't it? Oh, let me just go back here. Yeah, sorry, it was the Friday before. You know what? Before I send the slides out tomorrow, possibly today, but more likely tomorrow, I'll add that essay here. Sorry, that's why everybody's bewildered. For some reason, I think I had intended to actually include it here, but I will put it in the slides so that you have it. If you are a Canadian subscriber, of course, you can go to the views and just go back to August 2nd on your calendar and scroll down here, and the essay is titled When Retirees Depend on Dependability, and then these are the stocks that I cherry pick. So they're not right from a search. I cherry pick them based on their price performance over the last 5 years, which was all good, in the double digits for sure, all of them over the last 5 years. And then for me, most important, dividend safety, really high scores on that 0 to 99 scale, and really strong dividend growth rate, suggesting I'm going to get a pay raise every year. And I own a few of these stocks, so it's always nice to know you're going to get a pay raise every year. All right. And then any price appreciation is kind of gravy. Yeah, Jim says Stan's Dependables is a very simple 3-line search, so you'll be able to recreate that in your US or any other country as well. All right, folks, I've taken a bit more time there, but I think that was all interesting. Bernie, by the way, says low interest rates, low inflation, high employment. Yeah, things are, the economy itself is quite bullish, both Canada and the U.S. We're in a bull market here in Canada, and we just we just need investors to recognize it and come back in. All right, and Kamel, by the way, says even if the stocks will go higher following good news, the overall trend is down, and gold, silver will continue higher. So, yeah, we need to break out. Both Canada and the U.S. and the other countries, we need to see a real push higher for sure. All right, thank you, everyone. Let's move on then, and we'll talk about how to trade multiple moving averages for fun and profit. If you're trading more winners or more losers than winners, this may be a technique or methodology that will interest you to at least try. I'm always worried about, we do introduce a lot of wonderful strategies, the 3 and 8 EMA techniques on weekly and daily graphs and even intraday. David Paul's 20 and 40 weekly simple moving averages, the value investing method that he showed to our forum. So we show you a lot of great things. I think this is another great one, but pick the one that works for you, stick with it. Once you make money with it, then move on to the next one. But I think you'll like what you see here, especially if you're looking for something fairly simple, because once it's set up, it's actually quite simple to assess and make a decision, especially on the buying side. You may have your own stop criteria and own method of determining when to sell, but this will help you a little bit on the buy side, I'm quite sure. Richard, David Paul's forum presentation. David, by the way, is our managing director for the UK, and it was at least a year ago. If anybody doesn't have any of our earlier presentations, you just need to drop me a note at stan.heller@vectorvest.ca, and I can send you a Word document with all the descriptions, dates, and recordings. At least for a limited time, I'll have that. I'm running out of space real quick. I'm going to get yelled at if I don't delete some of them. Ken, by the way, says employment figures were down yesterday. Ken, was that Canada employment figures? I have to say I was pretty busy yesterday. Didn't notice. That was Canada. Okay. All right, well, let's get into this. Same risk disclaimer. There's always risk in investing. In this presentation, what I hope to show you, and hopefully you will learn some of this you will know already, but we want to gain a directional edge in the overall market. So that's our market timing. So whatever your timing signal, if you're bullish, you want to wait for your signal. If you're bearish and looking to buy contras or short a stock or do an option put or something like that on the downside, you want that directional edge. And you want to find, if you're buying long, the safest, most resilient stocks. And then we can add multiple moving averages to your graphs for more precise, high probability entry points. And then it really should be a repeatable, rules-based process. If you're doing it differently or making a different decision all the time, looking at the same type of chart setup, it's just not going to work for you. You need to be consistent. Okay? James says, Stan, buy more memory. It's just a limitation with GoToWebinar. Well, I guess I could buy some more. I never thought of that. So I just want to start with some basics here. What is a moving average? The Moving averages help traders and investors determine the trend of stocks by smoothing out that price action and using the average of closing prices. Typically, most charting services and VectorVest has these closing prices. We can also put moving averages on RT or other VectorVest indicators, and we'll show you that in a minute. But typically, it's closing prices over a predetermined look back period of trading days. The two most popular types of moving averages are the simple moving average, which is just the average price of a security over the number of periods. And then there's the exponential moving average, the EMA, which reduces the lag by applying more weight to the recent prices. Common entry and exit signals are when price crosses above or below a single moving average, and also when there is a crossover of two and sometimes three moving averages is another method. For example, there can be a simple triple crossover system where the 3-day moving average might cross above the 8 and 20-day moving averages, for example. So different ways you can use the moving averages. What I'm going to show you, and Alan and Michael and a few others kind of guessed right away where I was going with our presentation today. For whatever reason, I've just become aware in the last several months of the Guppy multiple moving average trading system, and picked up a copy of Daryl Guppy's book and just really got engrossed in it, and started to trade it back in January, and I really like it. So I wanted to share it with you once I really felt a bit more confident with it and understanding from the book how Daryl Guppy uses it. The indicator and technique was developed and popularized several years ago by an Australian financial writer and author by the name of Daryl Guppy. He called them the Guppy multiple moving averages, or GMMA. And what I'm going to show you is, you don't want to, well, we have VectorVest tools and indicators that can help you get the most out of what we use with these multiple moving averages. So what is the GMMA? It's two bands of moving averages with different time frames that represent two groups of investors. One band represents the price behavior of short-term traders, and a second band represents the price behavior of long-term traders. So it's bringing those together. And Daryl Guppy in his book Trend Trading says multiple moving averages captures the character of the trend and the relationship between two dominant forces in the market, the short-term traders and the long-term investors. And Alan says, by the way, Daryl is called the chart man in the Asian market, so that's interesting. I've spoken to his son Ryan and had a great conversation and help from Ryan. Very congenial. So here is sort of Daryl Guppy's logic behind the use of the GMMA. Traders always lead the change in trend. Their buying pushes up prices in anticipation of that trend change. The trend only survives if other buyers come into the market. Those are the long-term investors. So the short-term fast-moving averages are used to track the traders' inferred activity, and these are the moving averages that he uses, the 3, 5, 8, 10, 12, and 15 EMAs. The long-term investor takes more time to recognize the change in a trend, but eventually follows the lead set by traders, and that's the confirmation that we're looking for. Long-term moving averages are slow, and they're used to track the investor's inferred activity. And once again, he uses the 30, 35, the 40, 45, 50, and 60. So how does that look in VectorVest? Well, we have the 3, the 5, the 8, the 10, the 12, and the 15, all with the same color. So in other words, we go to the style and make sure the color is all the same. I'm using green. And then on the long-term investor side, the 30, the 35, 40, 45, 50, and 60 and I'm using a blue color. And again, what is the purpose? The indicator gives us a greater depth of information, and that's the key. We're getting information how traders and investors are valuing the same equity or ETF, and that really gives us a pretty clear indication of what's going on. You can see the green band moving higher here, and certainly a little more active, obviously, than the long-term investor band. But when you get a band that's going like this, from what I've seen so far, and we'll look at a lot of graphs today, this is what you love to see. And you don't need to buy in back at the crossover, although wonderful if you can, but you can buy in when they come closer together and still have a really good run. You can buy in anywhere you have the bands moving up parallel with a nice gap between them. So it's used in technical analysis to identify trend changes. So here's the chart setup. We have price, we have a 200-day simple moving average. This is my setup anyway. I like having the 200-day simple moving average when price is above it. That's a little more confirmation for going long, and it's used by the institutions, so I find it very valuable. We have the short term, the fast exponential moving averages that we talked about before. We have the slow exponential moving averages for the long-term investor. And then I really think you might want to use the 40 simple moving average of relative timing, RD. It's right from the Midas Touch layout. It provides a little more confirmation. Quite often I've noticed on graphs it'll keep you from getting in too early. And so that trend of that 40 moving average of relative timing is really valuable in your charting. And then we want to use earnings per share. Earnings per share with that forecasted 1 year out earnings is so valuable, letting us know that the company has got strong, consistent, and predictable earnings. So valuable. So that's our chart setup. Not sure why I've got so many of these animations in here. I don't remember putting them in. Anyway, why the 200? It determines whether money's flowing in or out of the equity, and it's used by the institutions. So it just provides additional confirmation. Why the 40 moving average of RT? It confirms the direction, momentum, and magnitude of price moves. It's an exclusive indicator to VectorVest subscribers, and it's just incredibly valuable, as you'll see on the charts. If you're looking for consistency in your trading, you don't even need the moving averages. They're just another confirmation if you're using the 40 moving average of RT. But everything working together just makes it so much better, allowing you to trade with confidence. And of course, earnings per share, we know that VectorVest teaches that price tends to follow earnings, so VectorVest allows earnings per share to be tracked on a graph. And then why multiple moving averages? We get more information about the trend and that relationship between traders and investors and how they are valuing that stock. And when they both value it higher than the current price, then that's a good time to be entering that position. So let's just go in and set it up on a chart, and then we'll go in and look at the rest of the slides here. Any questions so far? I see Bill is answering a few in the background here, but let me just see. Gary says just taking an average of those fast and slow moving averages would work. I'm not sure, Gary. I'm using it the way Daryl Guppy set it out, and I think it works great. Yeah, Colin, I'm going to show you how to do your color coding and so on right now. So if you're having trouble setting it up, what I love about VectorVest, it's easy to set up. The colors are vibrant. I tend to use it with a black screen. I'm using the white screen for presentations, but it shows up vibrantly in both black and white, and I really like that. That's energizing to me. So very easy to set up. So let's just go here to the Viewers tab, and I'll click on Graph All. And I'm just going to start with the default layout. So there is the default layout. We have price in the upper portion of the graph going across there. And then we have the RT in the subgraph. And we have a moving average of 40 on price as well. And I do tend to keep the buy, sell, hold recommendations across the top. You certainly don't need to, but I find them very helpful. Just another confirmation. If you see that buy there, you know the stock has at least some fundamentals that are decent, maybe not excellent or even strong, but they're at least decent. And then you know that the stock is moving up in price. Otherwise, it wouldn't get that buy rating. So from here, the way I've set up my charts, we go to the price column. Alessandra, yes, you do take the market timing signals in consideration with this technique. None of this works if you're on the wrong side of market timing. You want to be a buyer when the color guard is positive. So I kind of go into that in the rules, and I'll do that in a few minutes. But you absolutely need to take that into consideration. And Barry, by the way, from Halifax says, I love the REC, the recommendations. Absolutely. So valuable. You can run that search for new buys and then look at your chart and see if you've got the right setup to go ahead and place the order. All right, let's do this. Let's set up our graph. So I'm coming into the price column. I can come into the blue area, select moving average, exponential. I'm going to start with all 10s here for the first 6. I can go into the gray area, right click, just don't click on the letters. Add moving average, and did I do simple? No, I did EMA. There's EMA 10, right click, add moving average, exponential, EMA 10, right click, add moving average, exponential, EMA 10. That's 1, 2, 3, 4. Right click, add moving average, exponential, 10. That's 5. Add moving average, exponential. That's 10. I now have 6 moving averages. So the first one, I'm going to make the 3. If I make a mistake, somebody let me know, and I'll just highlight it. I'll take off the 40 simple moving average. I'll take off price, and then I'm going to come into the second one and I make that a 5. Whoops, there's the 5. Come down here to the third one, make it and whoops, did I make that a 5? There we go. 3, 5, 8. 10 is good, and 12 and 15. So I think I'm all good on that. Let me know if I'm not. Yep, I've got the 3, the 5, the 8, the 10, the 12, and the 15. So I can check them all. And then I'm just going to go in and right click. So Colin, this is how you would set up your colors. So come in here, change the style. So we right click on the first one, change the style, and it pushes it up here, and I'm just going to make this the dark green. You can use different colors. You'll use these lighter colors typically if you prefer the black screen, but I'm using white, so I'm going to set it up with a dark green. Click OK. Come to the 5 EMA, change style, dark screen, or dark green I should say, EMA 8, change style. EMA 10, change style. Whoops, did I not click it? Couldn't click OK. And the 12, change style. Click on the green over here, click OK. I'm just leaving the thin line. I'm not going for a thicker line. Get too busy. And then finally the 15, right click, change style, and green. So now I've got my traders band, starting with the 3 moving average on down to the 15. Everybody good? Mert says CG comes up as the Cargill group in the US version. Yeah, I've got both Canada and the US open here at the same time, which we can all do. And so it comes up as Centerra Gold. Boy, yeah, gold stock's been any good. All right, so now we want to put in our investors moving averages, the EMAs that help us track the longer term investors. So once again, I'll come up to price, right click, add moving average, exponential, and I'll add the 20 this time. Right click, add moving average, exponential, I'll add the 20. Right click, add moving average, exponential, I'll add the 40. Right click, add moving average, exponential, another 40. Right click, add moving average, exponential, another 40. And in the video you can pause, you can fast forward, rewind, all of that sort of thing. So if I'm going too fast, I apologize, but just to get this done. And one last one here, I think, the 40. All right, so now I'm going to come down, and where the first one is, I've got the 20. I'm going to bring that up to the 30. So that's our first for the long-term investor. Next one was the 35. I don't have my list in front of me, so help me out if I need it. We have the 40 already set. We'll go to the 45 here. And we'll go to the 50. Whoops. Got 30, 35, 40, 45. We've got 50. Click on OK with that one. We have the 55. No, we don't have the 55. 1, 2, 3, 4. Yes, we do. 55. And 60. Have I got these right? I don't have my list right in front of me. No, 55. Okay. Let's get rid of the 55. Just right click on it, remove item. So I've got 1, 2, 3, 4, 5, 6. Yep, thank you. We're all set. No 55. Thanks, Barry. Thanks, Bruce. That's it. Okay. And then we just want to change our colors. And once again, I've made these blue. You can make them red. You'll notice I typically look at the chart without price. I mean, you can always add price back and look at things, but typically I just go this way. So I'm going to come to the 30, right click, change style, make it a blue, click OK. I'm going to come to the 35, right click, change style, make it blue, click OK. And the 40, change style, make it blue, click OK. 45, right click there, make it blue, or left click I should say, make it blue, right click on the 50, change the style, and the last one is the 60. We'll change the style, click up here where the line is, or the line style, make it blue, and there we have our moving averages. I'd like to add the earnings per share. First I'll add the 40 moving average of RT. So I right click, add moving average. I'm right clicking on the RT, add moving average, and it's just a simple using the Midas touch format. There's the 40, it drops it down to the bottom, and I can put that on the graph, and I'll just right click on it, make it an area, and I'll remove the RT itself. Okay, and I'll just change the color here as well. So we now have our 40 moving average, and you can see how critical this is. Here you've got some buy ratings up at the top, a buy and a buy. You definitely don't have the crossover yet, or what we're looking for, and I'll show you that in a minute. But you can see we need this RT moving up and crossing, and both our moving averages bands, the traders and the long-term investors, in agreement and moving up. And this gap widening is a nice confirmation. And then we'll add our 200-day moving average. Did I do that? No, I did not. So we'll right click in the moving average. This is a simple. We'll add the 40, and before we check it, we go all the way up to 200. If you check it, it'll just move up a little bit more slowly. So I leave it unchecked until I'm there. Right click, change my style, make it thicker, make it orange, and there's my 200 day. And the final piece of the puzzle is the earnings per share. And typically what I do, and I'll make it an area here as well, typically what I do, I kind of look at earnings, and once I'm getting down to making a decision, I might uncheck it, and then I can always come back to it. But if I'm looking at graph after graph. So we're all set up. So that took a bit of time, but hopefully you're all good. Bruce says, if they're all the same color for each group, does it not matter if some of the MAs are below the others? Bruce, you'll see that often on the short-term trader band, where you can see here that maybe the 3 is crossed below the 5. That's not, you can track that, but it's not as important to us. We're interested in the compression here for sure, and then we're interested in the relationship with the long-term investors. So I'll kind of go through that and show you that. Yeah, Camille says, I like it. 2-minute decision to find the right stock to pull the trigger on. Yeah, the simplest way to trade it, of course, is this, just the crossover. But I'm going to show you again just how vital the earnings, the moving average of RT, how that can kind of save you a little bit and also get you really strong entries as well. And of course, picking the right stocks is key. Those high CI stocks, the ones that are resilient, are the ones you want to look for buying long. So those are high comfort index stocks. All right, so I've got my chart layout, and now you can just kind of zip through. And there's Kirkland. I'm going to show that quite a bit in the slides. This is the end of day. Folks, here is something that just impresses me no end. You can use this on any time frame. Intraday, end of day, end of week, which is just the Friday closes, or the weekly, which collects data throughout the week. So I like to look at the weekly, and just look at this. There's Kirkland on a weekly graph. So crossed above the 40-day moving average here. We had RT crossing above 1. We had buy rating, and we had earnings rising. And the traders band, the short-term or faster moving averages, pretty much stayed above the longer-term investor moving averages this entire time. Now, you start with a good stock. Kirkland, believe it or not, is a gold stock for those of you outside of Canada and the US. Kirkland is one of our strongest VST, value safety timing stocks, because it has such a high relative safety and a high relative value. So you start with that. It's got a high comfort index, And this is what you wind up with. Sometimes, not always, but certainly in this case it's in spades. So I find the weekly chart works quite well. Also, PVG a little bit more volatile, but again, 200-day keeps you in and out, and the 40 moving average gives you the warning that momentum is slowing here, so you can make your decisions on the sell side. KNT, nice opportunity to come in here. Alright, so I've shown you how to set it up, and by the way, you can use this with sectors as well. So here, for example, is the sector graph. I can go to the industry graph, and it works quite well for that as well. I'm going to go to end of day, and I'm going to go to 6 months. So there's the mining gold silver. So some folks were asking about, mining gold. Is it too late? Well, if you pick the right stock, the industry is still rising. All right. And I'll put on the RT ranking, which you can do for industries and sectors. And the RT ranking is currently 19, and it's been rising. Okay. All right. So before I go out of here, I want to show you one last thing, because you're wondering, once you've got this set up, do I have to set this up every time? No. You would go to Graph Layouts up here at the top right, left click, Save, Modify, Layouts, add a new layout, click on Add a New Layout, and then just give it a name. So, multiple MA plus 40 RT and EPS. Okay, now you're all set. So anytime you can come to Graph Layouts and choose that, and you'll have this layout going for you. Yeah, Marshall, options, we're not going to make this an options class, unfortunately, but if you have questions about options, that'd be a good one just to contact our support team. But certainly I think this layout, well, I know this layout really will help you with your options trading as well. All right, so let's go back to the slides and just look at a few more things. Yeah, Tim. I mean, you can. Tim's point is, he says we could call this the Heller moving average graph. Well, the thing is, you can set this up any number of ways and set it up the way that suits you the best. But obviously, if you're using the multiple moving averages, and I've subsequently over the last several months seen different videos that use different moving averages rather than the original Guppy moving averages, and it seems to work okay. But I think Mr. Guppy spent a lot of time figuring this out, and so I've just been using it, and it works really well. So there's Kirkland again. There's your short-term traders. There's your long-term investors on a one-year graph. This is the Canadian. This looks a little busy here, but a few things I wanted to mention. For example, over here on the left, when the short-term faster moving averages, the short-term traders, that band crosses below the blue investor band, then it really is time to consider exiting the position. It may be a short-term pullback, but you can take caution or take risk off the table that way. The expanding green lines, the traders are leading the way, just as Daryl Guppy mentioned. And then here we have compression. Especially, we tend to look first for the long-term investor, and when we see this compression, there's a lack of volatility, but just like Bollinger Bands, when there's a lack of volatility, you expect there's going to be a breakout in one way or one direction or the other. In this case, it broke to the upside with the traders again leading the way, and you certainly could have traded right here on this crossover. But Daryl Guppy suggests that you want to see some separation or expansion of these lines within the traders band and the lines within the investors band. So we've got that time to get in, and as we see this gap in between the two bands is growing, that's a good time to stay with the trade. When it comes closer together, maybe you add some shares or buy new, and then we get up to the top, and then the short-term trader bands start to converge or compress, so a little bit of a warning there, and the long-term bands are flattening out and starting to come closer together. A little bit of a warning, and then we have this compression again, and then we have the lines expanding and time to go at it again. Greg, I haven't looked at it with leveraged ETFs, but you certainly could. Eric says, I bought at the last compression. Fantastic, Eric. That was a perfect time to come in. So compression here and wait here, and again, when I showed you that Kirkland graph, if you had the 40-day moving average of RT moving up at the same time, that was a great time to come in. And here it is here. So notice, you can avoid false breakouts or buying too early by waiting for the gathering of momentum, and that's the moving average of RT. That's the gathering of momentum. It's like a rocket ship. When it blasts off, takes some time to get going, gets above 1 here, and then once it's going though, just like a rocket ship, it's hard to turn it around, right? It's got a lot of momentum behind it, and that's how the RT is designed. It shows us that momentum and magnitude of the move, and it's been above 1 ever since. So even here, the momentum was slowing, and we could see it up top as well, but it never got below 1, and then it took off again. So just one little blip here where the traders band got below the investors band, which might have caused you to exit. Again, you could put price on and just see what the candles are doing, but there's the compression, and there's where Eric just bought in, I think, according to his comment in the chat box, where you have that expansion taking place and the RT moving average moving up. And we already know the earnings per share was going to the right edge. So here's on the US side, works equally well in all countries, I believe. I've certainly done some trading with it on the US side. Here is that compression again of the investors blue band, indicating there's been a weakening of the trend. It had been in an uptrend, and there's a weakening of the trend. Volatility is slowing down, and then you expect a breakout at some point, either upside or down. In this case, the traders led the trading higher, and the investors band followed along. We had a really nice run, and then we had compression of the green traders band here, sort of a warning sign, and it did actually fall below the blue investors band. So time to get out and maybe consider going short. But when do you go short? Not right away, just based on this crossover. You could, but when it fans out, when you start seeing the expansion of the blue lines, that's really what Daryl Guppy suggests would be an ideal time to take a short position, either with options or shorting. And of course, you can use these with indices as well. Yeah, you could. It does coincide with our regular analysis for the trades. You can certainly use it in the same way. We're looking at moving averages, just the same way we do with our default layout, Kamel. It's just a different setup for those moving averages. And then again, I really like bringing into it the Midas touch through the 40 moving average of RT. I just think if you're a conservative investor or an investor that just doesn't want to take too much risk, buying when the moving average of RT is rising and you've got your price above your chosen moving average, in this case multiple moving average of short-term or faster moving averages above the longer term slower moving averages, it just puts more odds in your favor. You still need to have a stop price and know when you're going to sell and get out, but it can help you maybe improve your win rate. So here is friend Amazon, and you can see the compression taking place here and then the expansion. So this is a really high price stock, obviously, so these moves are pretty big dollar moves, in this case to the downside. Then we had compression, and then we had a move to the upside, another $30 or $40 move to the upside once we hit this expansion. Once the RT moving average started to move up, that was a great time to enter. Here we sort of lost a little bit of momentum, and we actually crossed below with the green below the blue here. Definitely an exit point right there. This is daily that I'm looking at right now, but I got to tell you, Richard, I really like the weekly graph, and I'll show you that in a minute. But if you want to be a little bit more aggressive or faster, the daily is working just fine. But I think I showed you Kirkland on a weekly. Boy, when you catch that trend, you can buy when those lines are moving up together in parallel fashion and the RT is moving average of 40 is above 1. Great opportunity. So here is a 3-year weekly graph of Shopify, and Shopify has been a really volatile stock. Would anybody disagree with that? Ghislaine says I'm using the 40 moving average with the indicator. That's okay. We use the 40 with the RT moving average as well. And Ellen says, interesting to match the dividend payouts with the graphs as well. And of course, in VectorVest, we can put the dividend payouts right on the graph, or at least to know that they are making the payouts for sure. But here's Shopify, and you can see some buying opportunities along the way when the short-term traders band came a little bit closer to the long-term traders band. Maybe here was maybe a better opportunity, and then it fans out or expands, and that's a good entry point. This is a good entry point. Here we have a little bit of compression, but it never got below the blue bands on a weekly, and you could just hang in there knowing that the long-term investors are still hanging in there. And then we get the breakout with a nice fanning out of the green lines and the blue lines. Just a terrific entry, and I know it doesn't look like much on a weekly, but folks, price was 200 right here, and currently it's well over 400. So that's a big move. This is on the Canadian side, but it trades on the US side as well. And notice the 40 moving average of RT, although momentum was sort of slowing at times, the moving average of RT never got below 1 the entire time. But when it started to rise again from this lower level, it really took off. Badger, I'm showing this just because it's one of the stock that I own and found with this technique, and just showing here you don't have to buy on the crossover, although that was a good time to enter. As it turned out, we had a buy rating, we had the crossover of the bands, but if you waited a little bit with these long-term moving averages in blue moving up in parallel fashion, that was a really strong indicator. And of course the moving average of RT rising strongly as well. So there were some opportunities to buy all the way up, and then we had the sort of the compression of the traders band here suggesting a warning, and then it crossed below, maybe time to consider selling, unless you're buying for other purposes, long-term dividends or something like that. And then again, here's the gold. Here's our usual default graph on gold, silver, and I've been teaching for years in Canada because we don't have the Huey. We like the Huey on the US side with the Midas Touch layout, but in Canada, when the gold silver industry group rises above the 40-day moving average and the 40-day is starting to flatten out, that's a great time to start buying gold positions. And that happened fairly early in June, and the RT rankings also coming up off a very low bottom here. And you actually see the very same thing, Kamel and everyone back here, just another little confirmation uh, that the gold silver was moving up pretty nicely on these multiple moving averages. So that's sort of the contrast between the two graphs. So here's some trading guidelines, and you'll want to set your own rules. You always want to trade in the direction of the crossover or the breakout, and certainly you want to make sure you've got the market timing in your favor, whatever your timing signal is. When both traders and investors bands narrow and compress, prepare for increasing volatility and a change in trends. So, that compression and then a breakout with bands starting to expand is your signal. The long-term band confirms the trend direction. Watch for contractions of the short-term band and the long-term band for entry, setups, and adding shares. And get additional confirmation with the 40 moving average of RT rising. I think this is essential. And then the earnings per share rising and price above the 200 moving average. These two I would suggest, and Steve Chappell really hit home the importance of earnings per share with the hot stock picking contest. But these two are really key. And then gain a directional edge in the overall market. Dr. Lido says Wall Street experts consistently say you can't time the market, but VectorVest times the market, and we do it quite well, thank you. We don't predict the market, we track and analyze it, and we're trend followers, just like we are for stocks as well. We decide what to do based on fact and not guesswork. So heed the color guard. The primary wave, at the very least, the fastest timing signal, should be up when you're buying long. More conservative traders might wait for the green lights in the price column and guidance in words in the color guard saying it's okay to buy stocks. Be aggressive when the MTI is below 1 and rising, and especially when it's near or below its historical benchmark low of 0.60. This is true for Canada and the US, and I believe for the other countries as well. Maybe some slight variations there. Be defensive when the MTI is falling from above its historical high benchmarks of 1.30. I find that's the case for most countries, certainly in Canada, where we have fewer numbers of stocks. And then 1.50 in the US is the sort of the high overbought benchmark in the US. Okay? Thanks, Don. And then I just some years ago we had this graph put together on the MTI, just showing you the emotional market cycle. If you Google the emotional market cycle, you'll get about 1,000 variations of these words. But in VectorVest terms, when you're down here at 0.6 and below and the market is blasting off, it's the safest time to buy. So when other people are selling because they've gone through the anxiety and the panic and the despair and finally capitulation, so they're selling, you should be thinking about buying as soon as the market starts to turn up and we get a primary wave up. That's the safest time to buy. This period of overconfidence is when the MTI is at those highs of 1.2, 1.3 in Canada and the other countries, and then in the US 1.5 and 1.6. You still can buy up there and still make some money, but you've got to manage your positions a little more tightly and just be prepared for momentum to slow and a return back to the norm here at some point down here. How to find trade ideas: study the graphs of top stocks in the stock viewer and your favorite watch list. Consider sorting by relative safety first and then comfort index, and then even change the sort to RT times CI for looking for momentum plays. And then look at the graphs. You can create a watch list of those high RSCI stocks and wait for entry setups. Or you can use some of the favorite watch lists that we have: the Master Retirement, Wow dividends, S&P winners, those sorts of things. Run your favorite searches, and if you have the Pro Trader, you can search by moving average crossovers and run the new buys search regularly to find and study the stocks. And then favor the safest, most resilient stocks. So again, look for RS above 1, CI above 1, and earnings rising all the way to the right edge. And we're certainly learning from Regina and Kohlberg user groups that focusing on those rising sectors and industry groups is a terrific approach. And then finally, from Daryl Guppy, he said, come to the market and there are many head-turning trading opportunities. It takes discipline to focus on just a single type of trading opportunity. And then Brian D'Amico, I know from his VectorVest University presentations, has oft repeated, become good at that one thing that consistently makes you money before you move on to the next best thing. So I think this setup is terrific. It's working for me. I still use other setups as well with some technical studies and our other graph layouts. But if you're looking for something that might make you a little more consistent investor and trader, this might help you. And if it does, practice it, paper trade it until you become proficient at it and make money in paper trading, and then put it to the test with real money. But in the meantime, don't throw out the bath with the bathwater. If you've got something that's working for you, stick with it and just try this a little bit on the side. Does that make sense, everyone? Oh, great, Tom says the slide answered his question. Any other questions? I've got a bit of time. We could certainly look at more graphs, but I think you're going to see a lot of the same things that we've been looking at. Here's the US. Again, if I go to the Viewers tab and just the Stock Viewer, these are the top VST stocks, for example. I'm going to switch it to the top Comfort Index stocks. You can just left click here and you click on the Graphs tab, and they're going to look pretty good, and you're going to like the way the short-term traders lead the long-term investors and how you can use the techniques that I've identified for you here to make some pretty good trades. Okay, so I would say, you know, we've got all weekend. Look at about 300 graphs, 400 graphs. Fred says, interesting approach. Thanks for sharing. Yeah, just try it out, Fred. See what you think. I know you're a long-term investor. Use the weekly setup. I think that's what I like to use, and I think you'll find some great stuff. Now, we do have some new folks on the webinar, and I'm sure we'll be watching the YouTube. This is our product support and training. If there's something you have questions about, you can call 1-888-658-7638. If you have a question for me specifically, again, I will send out the recording and slides, and I'm sure I'll remember to include last week's essay in the slides for those of you outside of Canada, but you can email me if I forget, stan.heller@vectorvest.ca. And if you're new, give VectorVest a try. I think you have to agree, you just love our graph layouts and the vibrancy of our graphs and how easy it is to set up different techniques and setups on our graphs. So if you want to give it a try for 30 days, just give our number a call here, 1-888-658-7638, and they'll help you out. They're open today until 5 p.m. Eastern, and you'll get 30 days to try it all out. Yeah, Tom, we're trying to get the forum going typically the first Saturday of the month. I think September, though, we did go to the second Saturday, allow the school to get started and so on. So I think we're the second Saturday. Yeah, Mark, it wouldn't be, you're absolutely right, it wouldn't be too much to make a search that could work for that. You bet, especially if you have Pro Trader. Barry says, great new chart setup to find or confirm some great buying opportunities. That certainly was the idea. Thanks, Emmanuel and Tom H. Really appreciate that. Colin says, been using Guppy EMAs for 2 months. but the addition of the RTMA is a smart idea. I like it. Yeah, I agree, Colin. I was struggling a little bit until I just realized that why not just add that wonderful moving average of RT? It's such a smart indicator. It's if you had to remove all your other indicators, the RT would be the one you would keep. Leon, thank you. He says, thanks from the darkest Africa. Sunset 30 minutes ago. Wow. Very interesting. Thanks, Leon, for sticking with us. And Les says, thanks, grandkids are waiting for me. Gotta go. That's great. Mary, thank you so much. The YouTube address again for everyone. Let me go back there. You can watch the recording right away on YouTube. So it's kind of really neat that way. And of course, it'll stay on YouTube for the duration, so you can go back anytime. Now I went too far. So there is our YouTube address, www.youtube.com/user/VectorVest MB. That's it there. All right. The MTI, by the way, for Chris, is the market timing indicator. Your best friend when it comes to market timing, especially identifying those historical overbought and oversold conditions. Thank you, Raj. Steve, by the way, says, really look forward to next education. Got me in Kansas City as a follower. That's awesome. Yeah, Boyd says the Guppy presentation, another great tool. That's great. Well, I'm using it and having success, so I was pretty sure that our VectorVest community would love it as well. So that's great. Thank you, Mira. Albert is asking, how do you change the graph background color from black to white? So a couple of ways you can do it, Albert. Here I'm back in VectorVest, and I can just go to the Tools tab up at the top right, left click on it, click on Application Settings. So I can go to the Graphs tab, and you can see here I can change the theme to VectorVest Black just on the graph, or I can go to the General tab and change all of my scheme from custom to VectorVest 7. Okay, classic is the white. All right. No, Kamel, I wasn't planning to design a search because I'm not using a search for this myself personally. I guess maybe I've got too much time on my hands, but I just really like looking through the graphs and honing in. I use my favorite watch lists, and I will add some stocks from searches, my favorite searches, to those watch lists. But I didn't create a search for this. But certainly with ProTrader, if you have the ProTrader, if you have real time, you have ProTrader already. But you would just come into the ProTrader module here, and here's your EMA crossovers. Okay. So you could do some manipulation in here. For example, the 3 crossing, or I would actually use is currently above maybe the 5. And then you could just keep going down the list. Stocks, price volume, price split adjusted, ProTrader, EMA, make it the 30 is above, say the 6 or 50, I guess we have here, is currently above. So now you've got a search that at least meets some of those criteria. Okay, very easy to do. Thank you, Erwin, and congratulations to you and Ellen and all the members of your VectorVest user group in Regina. I think it's pretty fantastic what you've done. And people were starting to get more of the meetup program with some of our user groups. And so if you're interested in the Regina user group following along what they're doing, you can go to Regina Meetup if you need some help with that. Again, call the support team, but I noticed Regina had quite a few new members. That's pretty fantastic. Thank you, Erwin. uh, yeah, Eric, did you have VS? You wanted to look at VSI, and if you have to go, everyone, I certainly understand. Just getting some stock requests here at the minute. We'll just quickly take a look at VSI. So the way we always start, of course, is to look in Stock Viewer. It's a vitamin shop. We look at price, compare it to value. It's fairly valued, not terribly undervalued, but certainly not overvalued. We have RV at 1.04, so it's got some upside potential. The relative safety, Eric, you're probably looking at this stock for a momentum play because the financial consistency and predictability is quite weak here at 0.60. Relative timing, though, it definitely, people are buying this stock. Institutions are buying 1.79 with our technical indicator. These three are on that 0 to 2 scale, and then the composite value safety timing with more weighting on the RT is 1.29. Very low comfort index as well. So maybe it hasn't been in the database that long. It's in the retail industry group, which if I scroll over to the right, all right, where's my RT ranking? There's the RT, 0.08, and it's 169th out of our industries, so not strong on the industry group. But if we look at the graph, let's see what this layout has to say about it. Okay, so there's, I got to go to graph layouts. Let's just see if I can find that layout. Whoops, I thought I had it. I clicked on it, nothing happened. Okay, so, oh, this is a little different than the one I set up for today, but let's just do this. And so you definitely want to add earnings per share, so we add parameter. I don't know what happened to my layout. I had it there, but capital appreciation, and there's earnings per share, so you definitely want to have a look at earnings per share. Looks like they had a big volume spike Thursday, so that's good news. Earnings went up quite strongly a year ago, and then it's been fairly flat, so take that what you will. And the RT moving average of 40 is starting to rise, so that's good. Got a new buy rating, and if I zoom in here, we were in this period of compression, Eric and everyone, and so we've come out of that compression with the short-term traders, and it does look like the blue lines are starting to expand as well. So this could be a good short-term play. I really like the buy rating, of course. I like the volume spike here. I like the fact that the RT moving average of 40 is starting to rise. Yeah, my 200 EMA, you got to have that on there. Thank you for that, Bruce. That could be a very, very useful confirming indicator. Let's just have a look, because it's just starting to move up after a pretty strong downtrend. So for the 200 moving average, we do use just a simple moving average. That's what the institutions are using. Whoa! So for me, this would kind of, let me put the price on here. Well, you know what? Price did gap up above the 200, so that's interesting. You might take a really small position, and if it proves itself and we get into this kind of a situation, then you could look at it. How long has this been going? Let's have a look at a weekly here. Let's look at 3 years. So, you know, good shorting stock all the way down, and now it's just flattening out. Mark says Vitamin Shop to be acquired for 650 as per Seeking Alpha. So Eric, there's your answer, and I should know that. Thank you, Mark, for pointing that out. It's close to the $6.50 right now, so it's had its jump, and you probably, wouldn't have caught that. Certainly not from this setup. Um, just got the buy rating based on that jump because somebody wants to buy it. Yeah, so it's Alessandra says Vitamin Shop said Thursday it agreed to be acquired at a 43% premium. All right, well, folks, I'm going to log off and just say thank you once again uh, for attending and for your comments and questions and participating. I'll get the recording out as quickly as I can. I know I've got a few things I've got to get done, but we'll do the upload fairly quickly. If you want to look at it more quickly than that, even before I can get it out to you, possibly tomorrow, go here to our YouTube channel. You'll not only find this video, but you'll find some other great videos on there as well. youtube.com/user/VectorVest MB. All right, thanks again, everyone. Really appreciate you all being here. Thanks very much, Joey. I appreciate that. Joey's making sure I'm doing okay on the YouTube. Looks like I've done okay. I just got to close out of everything, and then we're all good. Thanks, everyone. Really appreciate it.